Good morning, everybody. Alphabet just hit $3 trillion. But before you go buying Google stock, we're going to break down what it means for your money. Plus, in today's rundown, we got four other things we're going to talk about. Of course, we're going to talk about the Fed cut. We're going to talk about money inflows. Everybody's kind of chasing these market highs. Money markets have gone up and up and up. And a lot of other things, right? But we're going to have fun. Welcome to the Money Church, our Black Wealth Rebels weekly rundown of the markets, investments, and economics. And we give y'all our play for the week. How you doing today, Corey?
Man, I'm living. I can't complain about living.
If y'all notice, it's just me and Corey today because Jim's somewhere flying first class. So we hold it down while he's besmirching everybody that's not in first class. Is that fair, Corey?
That is definitely fair. He is definitely a seat snob.
Yes, he is. I ain't mad at him, though.
No, not at all. Listen, the more comfortable you can be flying, the better, bro.
Absolutely. It's never fun. But as everybody comes in, just come on in, check in with us, let us know who you are, where you're hailing from, and we're going to get right to it.
Everybody say hi in the chat. Somebody say something in the chat. Let us know that you're here.
Yeah, we got a couple people starting to show up. Nobody's in the chat just yet. All right, Don Johnson.
Yo, what's going on, Don?
Morning, Don.
Everything good in the world, Don?
Appreciate you, brother. And I'm sure Don has a piece of that 3T, that $3 trillion Google hit, either in his direct stock holdings, or in one of his ETFs.
For sure.
What up, OCL?
OCL, what's going on? OCL the sportsman.
Good morning to you, sir. All right, before we get going, y'all make sure y'all hit subscribe to our YouTube channel because we don't want y'all to miss any of these breakdowns we do every week. Oh, man, that's wild.
All right, so Google is his largest individual holding. Congrats to you.
Oh, yeah, it is. Hold on, let me get back to that. Oops, that's not what I wanted. Let me go find this. Oh, wow, I didn't even know that. I've never seen Don's portfolio. That was just a wild guess, y'all. I got absolutely no complaints. Google is my largest individual holding. All right.
Congratulations to you.
Makes sense, though.
Good morning to you.
So we know Don's probably following this joint.
Oh,
so
yeah.
He probably can school us on some of this. What's going on with Google?
So let's talk about that. Do you have a slideshow, or we're just
talking. Yeah,
all right, we're just gonna run it down. All right, so let's talk about why this matters, right? So Google hits the 3 trillion mark, and with them hitting the 3 trillion mark, let's talk about a few of the reasons why 3 trillion matters. One, it just signifies that tech companies and AI companies are still on the rise and on the run. The deregulation is also helping because now they can get busy and shareholders feel a little bit more comfortable with that.
Well, what is it? Monopoly. No, the monopoly.
Yeah.
They threw that out. That's why part of this is happening.
What's that?
I can't think of the name of it.
Okay, yeah, I'm having the only one. Both me and you having a brain fart on what the joint is.
Antitrust. I'm sorry. The antitrust case got thrown out. They wanted them to divest from Chrome and one of their other products, but that got thrown out. So they're sitting pretty right now.
Excuse me. Woo.
Cora's tired.
Yeah, man. You got other, NVIDIA. What you got? Apple, Microsoft. All of these companies is on a run. All your quantum companies. All of that stuff is on a big time run because of deregulation. Yeah, all of the data collection joints, Amazon, Walmart, uh, Google is the Amazon slash Walmart of data collection. Yeah,
That's
man.
very accurate.
So
That's very accurate.
what's crazy is as much information as all the other Facebook might have nearly as much as Google, but Google got it all, bro. They got all the info, like all of it. Excuse me. Woo. All right, just getting my life together.
Are you struggling over there, Corey? You need a
Yeah,
nap.
I'm on a struggle bus. So yeah, man. What it means for your money as a because we like to talk about what it means for your money. I would be cautious of the valuations. Um, at some point, it's going to get critical. I, not necessarily for Google, but for AI specifically. For the AI companies. Um, because at some point, everything that goes up either hits a plateau or comes down. I don't think we've nearly reached that point yet.
Nowhere near.
Nowhere near, but I would still be cautious of just running headfirst into anything without doing any kind of research.
And I also think the beautiful thing about Google is that they have so many other investment portfolio holdings, like other companies that they
Yeah,
got. Like we call it Google, but technically it's Alphabet,
Alphabet.
right? And they got all these other holdings of the Alphabet. So I don't think they're going anywhere anytime
No,
soon.
no, no. They're of my companies least likely to fail. They're probably number two.
Okay, who's number one?
Procter and Gamble.
Okay, all right, I ain't mad at that. No
Uh,
Amazon? No Amazon?
nah, Amazon. Well, because of AWS, I would put Amazon in my top five. If they didn't have AWS, I wouldn't put in anything that like that sells things. Eventually, they get replaced,
Okay,
right?
but I
So,
just got an idea. So we got to do a show on this. Our
top five companies least
top
least
five least to fail.
least to fail. Yeah, I just because of AWS, because so many things run on AWS, I would put them in my top five right now. Um, but the world changes,
Real quick, real quick.
right? All right, so yeah, so Google's a great investment, not investment advice,
It is not
but
investment advice.
I'm not sure if y'all fiduciaries do your own research. I love y'all, but you gotta do your own research. For me, let's be for me, Google would be a great investment. Um, Simply because unless government regulation does something terrible to them, they're nothing is going. The only thing that can stop these gigantic companies is government regulation. And right now, the government doesn't seem keen on regulating that heavy. So they're in a good position right now.
I mean, they might get in trouble if they hire like Jimmy Kimmel and the FCC gives them flack,
Yeah,
something like that.
yeah.
But no, they good.
Unless they do something real dumb, and you know, and get on the bad side of the government, they sitting pretty. Speaking of the government, Fed cut rates.
Yes,
Fed cut
sir.
the Fed cut by 0.25, which is a signifier. That was the expected cut, so the market didn't go crazy, but it also didn't take a dip into hell, because if they would have said no cut, the market would have took a dip into absolute chaos. And so they did the expected cut. The new range is 4 to 4.25. So that's the vig on your on the that's the vig on the money out there in the streets right now.
I still think it's a mistake, but
I do. I think it's
I'm not.
I also think it's a mistake, but it's none of my business.
Yep.
Well, it is some of my business, but I think
Ain't
it's a
nothing we can do
mistake.
about it.
Yeah. I more like that's what I meant to say. It is some of my business, but there's nothing I can do about it. Um, it wasn't unanimous though, and so there's some tension in the Fed. Like some people just they didn't want to do it because they understand actual economics, and they wanted to make sure that the economy is stable before they start cutting rates. And we have um, a government right now that doesn't seem to care about stability
at all. But
so
just remember, y'all, the Fed's goal is to have inflation run about 2% a year. Inflation's running about 3% right now. So they're not necessarily hitting their mandate, but it is what it is.
well it's hard to hit a mandate in an environment where people are losing jobs. So
Yep.
cutting rates and losing jobs, they're not supposed to go together.
Nope.
And so because
Telling-
cutting rates is supposed to stimulate job growth.
Correct.
And that's the two-prong thing that the Fed is supposed to do. It's supposed to stimulate job growth by using either rate cuts or rate hikes or leaving the rate alone. So it's supposed to either, the thing is, they want to either stimulate job growth or bring it back into a reasonable range using rates and borrowing.
Now they got two more cuts coming, right? Anticipated.
So anticipated cuts, yes.
Yeah.
So
gotta say anticipated or alleged.
Allegedly,
right.
But yeah. So you got to be really, really careful with the Fed and look at what they're doing. That 0.25 it just kept everything as the status quo, because October is generally a month, like September is generally the slowest month of the year. August and September are generally the two slowest months of the market anyway. Those summertime months are generally the slowest. And now this is where you normally start seeing the ramp up into the end of the year with your Christmas, all your sales, your Thanksgiving, all of that kind of stuff. This is where you normally start seeing your ramp up into the end of the year. So
I'm already seeing Halloween.
Yeah, Halloween, Christmas. So we're starting to ramp up into holiday season. And so stocks generally tend to ramp up into the holiday season.
But speaking about ramping up into the end of the year, I think we got a new holiday coming too, right? October 14th, which is totally nutty. But I'm gonna leave it there. I'm gonna just leave it there.
What's October 14th?
They celebrating the bull.
Who?
Congress is going to be celebrating the bull. The racist podcaster. I can't make this stuff up. But back on to the
as you could tell, you can tell I don't have no feelings one way or the other about bull. I don't care.
But back to the rate cuts, right? So we will see, like Corey said, it's going to be negligible, but loans will be a little bit cheaper. Savings rates will be a little bit cheaper. So I know everybody are excited about that 4% money market yields everybody's getting, but it'll probably go down a little bit.
Yeah, but also on the other side, which I always got to talk about, is the bond rate. So when you cut this rate, the bond rate goes down, which means people get less money on buying bonds. They need the reason why the Fed shouldn't cut the rates, in my opinion, is because you need more people to buy that debt. And so part of the reason rate cuts don't just automatically happen is because if you bring the bond rates down too much, people will stop buying the bonds, and then the debt starts to pile up, which we already got a pile of debt.
Right, I was about to say it's already piled up.
Yeah, but again, whatever.
It's going to get worse.
Mortgages will go down, which means it should stimulate some buying in the market. But because people are losing jobs, I don't know how that's going to work. Small businesses should be able to, get their hands on money cheaper if they can. Federal regulations are weird because it's harder for small businesses to get money and easier for bigger businesses to get the money right now because of the way whatever. Just it's harder for small businesses to get money even with better rates.
Right, because they don't have great cash flows. Well, I won't say great. They don't have as big of cash flows as big companies, like Corey's saying.
yeah, it's just harder for them to get money, and the market should, like I said, have a pretty decent reaction to that. Um, what strategy that I would use with the rate cuts? You got to look at the jobs numbers and the rate cuts together, and then you got to also look at inflows and outflows of debt. Um, that debt number is the realest thing, right? Because that's the thing that these other countries are really holding over the United States head. Um, when Trump was first starting that trying to bully the China and all the rest of the countries in the world, the first thing they did was buy up all the U.S. debt and then threaten to sell it.
That's gangster.
It was like, we're gonna buy up all this debt, and if you get on our nerves, we're gonna sell it and then cause panic selling in the market and cause all your debt to go into absolute chaos and turmoil and trash. And so that's the new tactic that these other countries have started to do as a way to keep the U.S. At arm's length with the crazy governmental things that is going on. I don't even want to mention boy name as the yeah, with the crazy governmental stuff that's going on. Uh, that's
Well,
how
allegedly, he struck a deal for TikTok with China. So
allegedly Oracle is supposed to be buying TikTok, which would be terrible for us.
yep.
And if you don't know why it'd be terrible, is because Oracle is the one who had helped to set up the Chinese observation state, the way they got there, the social what the hell they call it, the Chinese social something construct, John, where you got social credits system, and you don't want no part of that social credit system, because especially as a black person in the United States, the way it's already getting set up, a social credit system would be absolutely nuts. Um, in the way things are getting set up, so Oracle getting TikTok is not, it's not a good thing. It's not a good thing at all. But that's not something that we plan to talk about. So I'm gonna get keep that off of.
Nah, nothing to talk about. Just brought up to my mind. Brought up to my mind. What's the next topic, Corey?
Um, Global markets are at all-time highs. Um, and then it's like we having a rally around that. Um, but it's not a FOMO rally, right? So what people are saying that is a FOMO rally, but I think the rally is real, and here's why. Um, Global markets are jumping because a lot of people are divesting from the United States, and so that money has to go somewhere else. And so you had a lot of people putting their money, like gold is at near all time highs.
The
You got
Nasdaq,
the
the S&P.
Nasdaq, yeah, S&P 500. All of these things are all at all time high, which is why I was saying in the first segment to watch evaluations on these companies, because um, their PE ratios compared um, to the valuations that they have is so busted right now. Like it's so out of control. Like companies is being valued at 400, 500% of what their PE ratio is, which is absolutely sickening. Um, which says that a lot of these companies are super overinflated. When you, I used to think that in the old world, when companies would get overinflated like that, the market would drag them down.
What
And then,
comes up must go down.
but in this new market of the market can only go up. Um,
For now.
yeah, and for the right now, I don't know what it means for these new markets because the system has changed a little bit. It hasn't changed so much that all of the fundamentals are out, but the fundamentals like PE ratios and all that stuff, man, you can damn near throw that out the water, man, because companies are just out here doing whatever, and they getting these large valuations and haven't made a dollar, or even haven't made money. Their valuations is 5 and 6 times what they should be. So just be very, very wary of that. Um, Also, remember that the market is forward thinking, right? So they're trying to. The market is generally 6 months ahead of what the economy is doing. So with the market going up, it's trying to say that we might be looking at a pretty good market in the next 6 to 8 months, um, if nothing crazy happens, which could possibly happen. Because, like I said, this current government doesn't like stability, and if it did, the market would actually be shooting out of control right now. Um, the thing that has also brought stability to the market is that the tariffs um, are more stable. People know what they are now, and they can start to plan around what is happening with the tariffs. And so, unless bull go crazy again and start changing up the numbers on the tariffs, the market likes stability. As soon as they figured out that they could be stable and they know what the tariff situation is, and they know where they can get their money inflows in and out, and how to work around that, they good. You know what I mean? But you never know what the bull going to do. So
Now, Core, I just looked up some PE ratio, price to earning ratios. Tesla's PE ratio is bananas. Now, the S&P 500 PE ratio is only like 28 right now. So, like, when you judge that against everything else, you are absolutely right. It's a lot of stuff going crazy out here.
yeah,
Amazon is like 34, 35. Nvidia is through the roof, almost up like 50. So yeah, a lot of stuff. It's getting weird out of here. Getting weird out of here.
yeah, man. Like, if just be careful with your money. Looking at global markets. I probably would start looking into global markets. Like I said, there's a lot of people. Two things that's happening: people are divesting from the dollar, and they are moving into global markets because they know that even though the U.S. will be a power for the next 20 or 30 years, by the time this divestment situation is over, you want to already have your money sitting. You don't want to just be going in when it happens. You want to have your money already there sitting. So I would start looking into some things in the global markets. Whatever you can research and whatever you like in the global market, I'm not giving you no hints and no clues. You do your own research. But whatever you like in the global markets, I would get my money there and park it there now.
I mean, but a great way to do that is just get an ETF, right?
I mean, it is. It's a lot of ETFs out there, but some people like to do other things. So I'm not telling you, I'm not like I'm an expert on what I study. And so I ain't nobody's expert on what they like, but I would get some money into the global markets. Because
Gotcha.
because my thing is if big companies and all of these other companies are getting into the global markets, that's where the money is going to be going. You got to follow where the money is going. And so, not that the money isn't coming here, but it's not coming here at the rate that it once was. And so you gotta look at where some of that other outflow of money is going, and it's going into the global markets. That's why they are at all-time highs.
Right, right. And part of that is because, what, like you said, it's all-time highs. But like you said earlier, they reported like $43 billion has flown out of equity funds last week. But we got all-time highs, so that's crazy. That's crazy.
Yeah, so that's a crazy juxtaposition. Money flowing out of money markets, but the market going to an all-time high, which is absolutely crazy. Like, so when you have that kind of divergence, that kind of juxtaposition, that is that's combustible. You gotta watch. You gotta watch your surroundings.
Put your seatbelt on. Put your
Yeah,
seatbelt on.
you gotta look around a little bit because that could be bad.
You about to get smacked.
Yeah, you can make a hell of a lot of money, or you can get clapped up. You gotta watch it. Watch your surroundings. Put your body armor on in your and protect your neck.
So with all these all-time highs, right? I got a question for you and the audience.
Okay.
Do you think now is a good time to pull profits, or just ride the rally? Everybody, let us know what y'all think about that
Everybody
question.
has a strategy. I personally am not pulling any profits because I'm looking at I'm dollar cost averaging into the things that I believe in. and I'm also taking some of the money that I was put. So what I've done is stop putting as much money into those things that are at all time high, and started to look at foreign markets and things that I can get into um, in the foreign markets. So I haven't put actually any money into the foreign markets because I'm still doing my own personal research into what I like and what I feel comfortable with. Um, but I'm definitely taking. I'm putting a stat. I got a rock that I'm going to put away to get into these foreign markets. So when I do get into it, I'm gonna start dollar cost averaging into that also.
So for everybody that's watching, right, a rock is dry powder, aka cash.
Yeah.
So he's putting it to the side to get ready to pounce when he sees something he likes.
Yep.
Okay. All right. All right.
Yeah. So that's my personal strategy. Like I said, personal finances personal, and so you know
Facts.
you can whatever your strategy is, I would just say you know have your strategy include some foreign investment.
I mean, me
Um,
personally, I'm a ride the rally.
you're gonna ride the rally.
I'm a ride the rally because we know from history, one, I don't need the money. Two, the markets are going to go down. I'm dollar cost averaging in as well. So I'll benefit when the markets go down and I'll benefit when they go back up.
Yeah.
So,
Um, what I would do at these all times high is borrow against my my stuff. At with the rates going down and the markets going up, I would actually borrow against my investment.
and so I want to say thank you, Corey. I literally just got the approval last night because I'm borrowed against some of my investments to do some real estate work. That finally came through. It was dragging me through the ringer, but it's done. It's done. I
Yeah,
was
so
jumping for joy.
yeah, if you have assets, this is a great time to borrow against them. Rates going down and asset prices going up, which means you get more bang for your buck. Um, so yeah,
Absolutely.
if you have assets that you don't mind borrowing against, you know, especially like a stock portfolio, if the market is going up, you're already dollar cost averaging in, you borrow against it. Now you got dry powder to use.
Now, this usually is not open to like retirement funds. It's got to be
Yeah,
outside of that. But it's funny, man. Now that I got this, and I've always kind of known about it, I've never done it, but it's making me even more vigilant about start a stock portfolio first before you get real estate because you can always leverage
because you
the stock.
because they're not
To,
asking you for your
right,
credit score or none of
right.
that.
And by the
None
way,
of that.
I got bruised credit. That's part of the reason why I'm doing this. But some of the rates are better than some of the rates I'm seeing out on the street. So it kind of makes sense. So I can get the best of both worlds. I mean, this is really making my money multitask.
Yeah, so it's just because of the current environment. Um, using in the current environment, just borrowing against right now would be a great time to borrow against whatever portfolio you got.
All right, Don says, got to use M1 Finance. It
It
takes
takes
seconds for approval. Wow. Okay. You know what? I haven't even looked at the M1 financial platform.
so I had an M1 account like 5 years ago, maybe more than that, probably like 7, 8 years ago, and I never used it.
Mm.
I never ever used it. So uh, I got to get back to it because they wouldn't like it was brand new when when I was using it, and they just like Robinhood was brand new, and they made a lot of growth, and one probably has done the same thing.
Yeah, because Robinhood stock is through the roof right now, right?
Oh yeah, it is on the S&P right now. So
Right.
yeah, they rocking and rolling and rocking.
So Robinhood stock right now on Friday it closed at $124.78. That's wild. That's
Yeah,
wild. That's up. Damn. It's up 216% year to date. Damn. I missed that one, but oh well. I'm cool with that. I'm
yeah.
cool with that.
So
Can't catch them all.
yeah, just so what to watch for? You want to watch money flows coming into and out of um money markets and bonds. You want to watch that money inflow in and out. Where do you watch that at? You can go to the what's that Fed? Damn, the Federal Reserve website. I forget the name of the federal, but you can watch the info.
Fred, I think it's Fred.
That's Fred, but there's the actual Fed Reserve
Okay.
website. You can also Fred, FRED, all capitals, in the actual Federal Reserve website. You can watch the money inflows in and out. The Federal Reserve actually has the Federal Reserve banks each also have websites.
Yes,
If you want to get down and dirty in the mud and see their individual
OFR, financialresearch.gov. That's the money market fund monitor.
Yeah. So just, some resources if you want to go check money inflows and out. If you want also something to watch is the Forex market. The Forex market tells you about, what's gaining and losing against the dollar. With the dollar still being the dominant money, it used to be more dominant. So the dollar used to be 75% dominant in banks. And what banks have started doing is making it less dominant as a holding. So they're holding other currencies like the yuan and.
You mean the banks would hold 75% U.S. dollars?
Yeah, they would hold 70%.
Okay.
Because the U.S. dollar was used everywhere around the world, so they wanted to make sure that they had money. But what they started to do is reducing that percentage. And so if you want to look at individual banks and how they're reducing their percentages,
gotcha.
You might want to take a look at that, because what's happening is they're starting to hold other currencies. So they're starting to hold more of the euro, more of the yuan, more of these other currencies, because they know that something else is about to be in the next 20 to 30 years the new currency.
Right. Now, Corey, the last story we got for the night or for the morning, and this is funny because you just mentioned money markets. Money market funds hit 7.3 trillion, first time ever. So, we got all-time highs in the stock market, and we got all-time highs in money market funds. Like you said, so we really are in weird times right now.
Yeah, it's wild out here. That's why I said you got to walk around with your protective gear on, man, because nothing out here ain't safe for nobody or nothing out here. And so
that's a fact. That's a fact.
But there are ways to take advantage of it, and I just told y'all a few ways to do it.
Right.
So,
but let's go into that. Right, the money markets. Why are people? Because we are seeing people put money into money markets. Usually, that happens when people are scared, right,
yeah.
or uncertain. I won't say scared.
They're
fence, and they just want to park cash. So. But we're now also seeing, we're seeing money coming out of the markets, going into money markets. It's just really weird, really weird.
So, and that's another thing, right? So you got two things happening at the same time. You got people diving, three. You got people moving money. You got people that's diving headfirst into the markets, and then you got some people that's putting their money to the side on some dry powder, trying to figure out which way everything gonna go.
Right.
So you got all of these three things happening at the same time, and normally all three of those things don't happen at the same time. Usually, when one thing happens, the others don't happen. But all three are happening at the same time. It's because of the uncertainty in the U.S. market. The U.S. uncertainty is causing world markets to be wild.
Facts. I mean, because to your point, the market is an auction-based system. So more demand usually means higher prices. So more money into the market usually pushes higher prices. But we're seeing money come out of the market, and we're still seeing higher prices.
absolutely nuts.
So
Yeah, like I said, that's a combustible recipe.
right,
So
right.
be very, very careful out here watching that. Um, Anybody got any questions before we get up out of here? Because um,
Now, the other thing I did see too, Core, was that a lot of this is being driven by institutions. So a lot of institutions are parking money because they really want to see what's going to happen with the Fed rate cuts. We
yeah,
know we got the quarter rate now, but they want to see what happens for the rest of the year and to the first quarter of next year.
yeah, they just like I said, everybody. You got some people in the holding pattern, and then but you got some people out there on kamikaze mode. So you know what I mean? Like they out here doing their thing.
Gotcha.
So um, as a retail investor, you had to be way more careful than these institutions because you're not getting bailed out.
That's a fact.
So
That's a fact.
they're gonna bail
Nobody
these
cares.
institutions. Yeah, they're gonna bail these institutions out. Some of them just can't fail, right? But
Nobody cares. Nobody cares about the little guy.
your money, you're not getting that back. So be careful with it. Um, a couple things for us personally. Don says M1 is a great platform for long-term investing, but would be terrible to trade on.
Most people don't need to trade anyway.
Right? The actual factual situations. So a couple things for the Black Wealth Rebels. Um, will Jimmy and Kamari will be at the PABJ
Oh, yes.
meetup. That's at what's
That's
the name?
next Saturday, September 27th. You caught me off guard with that, Core.
Yeah, y'all will be next Saturday. Y'all will be there.
Yes.
Um, we'll be starting our camp in 2 weeks. Two
October
weeks,
4th. Yep.
October 4th. So, two things I need y'all to do. Three things I need y'all to do. One, send your folks if they in Philly. Tell them to send their child. Tell them to sign up at bthcamp.com, bthcamp.com. Tell them to sign their children up and send them. Tell them to come with their children, especially if they under 10 years old, because it helps with the understanding process with their parents. If the younger they are, the parents coming with them, it gives them so much confidence, and it gives them so much
So you mean we can't just be Saturday babysitters for some of these folks?
hey, listen, I will babysit your kids and teach them, but for them, I'm thinking about highest and greatest use. You know what I mean? How you get the most out of everything. The best way, the highest and greatest use would be for you to stay with your child. We will babysit your child and teach them and feed them because it's a safe space, and that's what we do because we Black men that care. But that's not what it's meant for. That's not what it's meant for at all. It's meant to build relationships with the community, to teach the children and the parents in a multi-generational way. Bring your grandma, bring mom, grandma, you know, bring dad, grandpa.
Everybody can
I
go.
mean, everybody can get it.
That's well
Everybody
said,
can,
Corey.
huh?
That was well said. That was
So,
well said.
but
I'll babysit your kids, but that's not the best and the greatest and best use.
yeah, it's not. It's because I'm gonna take the babies in regardless of what how how and what you do. But that's not the greatest and best use for what we got going on.
Facts.
So,
Facts.
um, so if you donations, same way that we did before, you know, whatever was not covered, we covering out of pocket. So of course, we always looking for help from our communities. Um, what else? The third thing. Hey, see, I got lost because that's my primary focus in life.
No, it's fine. It's fine. So I had to go back and look at the name of the convention. So it's the Emerging Media Diversity Convention. It's at Community College, and it's going to be September 27th from 12 to something. I look, but me and Jim both were doing panels at noon that day. Matter of fact, it's going to start at like 9, I want to say. Start at 9.
Yep. So with that, join us in the village at blackwealthrebels.com. Sign your that was the third thing. Join us in the village at blackwealthrebels.com. Support our work. That's another way to support our work if you join us in the village at blackwealthrebels.com. Look for announcements. Look out, for what we got going on. And if you got any questions, hit us up.
And just real quick, 5 takeaways, right? Big tech is flexing. The market cap rates, we talked about that. Market outflows are happening, right? Markets are also hitting all-time highs, and cash is starting to pile up. So make sure you factor all those things as you're thinking about money throughout the week, y'all. So we appreciate y'all. See y'all on Wednesday. Well, might not be Wednesday. See y'all next Friday. See y'all next Friday, y'all. Y'all have a great day.